Good afternoon and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. It is I, your host Q, coming to you yet again from my mother's basement, and I'm joined by my co-host extraordinaire, P. How are you doing, sir?
As always, doing fantastic. I'm excited to dive in.
And sorry, Chris, my bad. We are now joined by our special guest today, none other. You have seen him out on the streets of Twitter, punching and kicking at anyone who comes his way. You know him as Cory Klippsten. I know him as Father Savior Cory. How are you doing today?
I'm doing well. Thanks for having me. It's been a crazy couple of weeks. This all started like 2 weekends ago.
For those who've been living under a rock, can you maybe break down a little bit just on a big scale image of, you're hearing about Luna, but what happened in your eyes?
Yeah, sure.
Wait, before we do that, can we give a little bit more context in who Cory is and what he has accomplished? Because I think that I first came to hear you speak on Clubhouse. Before that, you created Swan Bitcoin, which is one of the, if not the first Bitcoin only company, certainly the first that leaned into it as heavily as you have.
Bro, I gotta kick some love to both Bull Bitcoin up in Canada with Francis and the squad, and then also Alex was already rocking and rolling with Amber down in Australia. So yeah. And Unchained, my God, like they sell Bitcoin now. Back then it was just multi-sig. There's a lot of Bitcoin only companies, but yeah, we were kind of the first one in the US that was going really hard at, like, you know, retail Bitcoin brokerage, education, service, that whole thing.
All right, fair enough. Anyway, Swan Bitcoin's amazing. It's a great way to DCA. You also focus a ton on education, which is something that is fantastic. Okay. With that frame, Q, sorry, please continue.
I want to just note, I was not unmuted on Spaces just now. Does that mean nobody heard what I said?
Now we took care of it.
What's that?
We took care of it. Everyone heard you.
So can I just stay on mute then on Spaces? Do I need to listen to Spaces at all?
No, we'll get your sound through.
Okay, cool. All right, I'm gonna I'll just stay parked there with it muted. Probably he's laughing at me because that dude like is on Spaces 24/7 and he knows how this thing works.
I just want to quickly remind everyone who is on Twitter Spaces, we are not going to be bringing guests up. We are actually live streaming right now. You can see all of our pretty faces. You can see what color P's beanie is. You can see Cory and mine's amazing flow over on YouTube with the link above. And one last little plug about Swan. They actually, correct if I'm wrong, Cory, but you guys actually came together and really the idea of Swan formed at the Bitcoin conference in 2019, I believe.
I was solo dolo, just me by myself, and I presented Give Bitcoin at 2019 and used that to kind of recruit some advisors. So that's where I met Jan, Stefan, and Parker within like 3 minutes of each other. If you want to talk about like overload brain power in a short moment of time, that was pretty funny. And then, yeah, it wasn't until I got the product out, I was still the sole co-founder and sole employee through December of 2019. And after we launched in November, you remember with Give Bitcoin, you could set up an automatic recurring gift if they're like of the few hundred people that did it back then. But you could also give it to yourself. And like 90% of the volume right out of the gate was people setting up automatic recurring purchase gifts to themselves. And we were like, evidently that should be the product. And that's when Jan came on and we stripped away the gifting for a little while and focused on Swan and raised some money and brought Jan on as a co-founder, got Brady, got Brandon, Brecky, a lot of the early crew. And then we launched in March of 2020. That's when Swan went live.
Love that. Love a good origin story. P, have I finished the entry level stuff so that we can dive into the thick of it? Because I'm kind of ready to just attack Do Kwon.
Let's fucking go.
Awesome.
Let's get it.
Thank you. So Cory, the craziness that really kicked off a couple of weeks ago walk us through, I think you were actually calling it from much earlier on. Talk a little bit about like what it was that was sort of sitting not right with you.
Yeah. So if you go way back, I still occasionally just check out like what's going on, Delta or Blockfolio or CoinMarketCap or whatever, and just kind of like keep an eye on things so I can be like semi knowledgeable about what's happening. And since November, literally everything was bleeding out. All the cryptos were bleeding out, except for there was one kind of just moving up the charts, and it was like Luna. So that just put that in my hip pocket. I was like, I don't know what that is. And then I don't care. Like, I'm not like a shitcoin assassin. Like, I don't really give a shit about your shitcoin. I'm not going to spend any time on it. But if you come close to Bitcoin with it and you try to do the Bitcoin affinity marketing thing and you try to get shine off of Bitcoin undeservedly, that's going to get my attention. I'm going to see what it is that you're marketing, right? Like, are you marketing, SoFi and crypto.com? That sucks. Fuck you. If you're marketing like, Luna, then double fuck you. So I wanted to see what it was. So that's when I dug in, when they said that they were going to buy some Bitcoin, and a bunch of Bitcoin influencers like jumped all over that and said, this is good for everyone and stuff like that. And even before digging in, I was like, narrator, it was not good for everyone. I think that was late March or something like that. Then I actually dug in like just one weekend. I think it was the end of March or the beginning of April, and just checked it out. And first, a decentralized algorithmic stablecoin is impossible. So that was obvious. I knew that from, watching Basis back in 2018 when they tried to get that going, and they realized that it was impossible to have an algorithmic stablecoin without a team actively conducting open market operations like a central bank or like a mini Fed, right? Because when you're under stress, you have to actually take actions. You have to borrow things, loan things, buy things to keep the peg. You can't just magically keep a peg, right? So it was never going to be decentralized, which meant that it was a security, first of all, and that it also, was never going to be decentralized. So it was just basically bullshit marketing claims. So that was annoying. Then I dug in a little further, and what really caught my eye was when I learned about the Anchor Reserve and the fact that there was somebody topping this thing up every month or so with like another $300 million, then $1 billion. And so it's like, okay, nobody gives money away for free, right? So who is giving that money away and why? Right. And it was some market makers. Jump was posting capital, and TFL, Terraform Labs, was posting that capital for the Anchor Reserve. Now, keep in mind, Anchor Reserve, what it is basically is you park your UST there and you get a 20% interest rate. Supposedly one day people were going to borrow from that. The borrow volume was like 1/6 of the lend volume on Anchor protocol. And the interest rate was lower instead of higher. People weren't borrowing at 22%. They were letting them borrow at 12 or 13%. So they're losing money. First of all, their volume is off. Their books aren't balanced. They're out of balance by 6x. And they're subsidizing everybody that's borrowing. So it's like, okay, what are you guys doing? Like, what's the game here? And literally the only thing that makes any sense whatsoever is they're bribing people to hold UST because that benefits them in some way. And the only way that they benefit is because they printed Luna, and over half of it was kept by insiders, and TFL got that for free, and their VCs got it free or cheap, and they gave it at a super discount to the market makers like 3 Arrows Capital and Jump. And all of those people knew that as the market cap of UST rises, Luna market cap was high beta to that, because it seemed to prove the viability of the Terra Luna ecosystem, right? This thing we're doing is successful. There's more TVL and UST and Anchor. So the price of Luna was pumping, and they were just all selling into the pump, dumping their Luna tokens. And so the calculation is it worth it for me, Jump or Terraform Labs, to give away another $1 billion because I'm going to sell $2 billion worth of, pretend money, pretend Luna tokens, right? So that's why they were doing it. So when you see tweets from like Novogratz where he's like, hey, actually we made out like bandits and we sold out of this thing before it crashed, it's because he was selling into the pump. And so you can't have it both ways. Either you're so unsophisticated that you can't figure out that an algorithmic stablecoin is impossible, that nobody's ever solved the Oracle problem, and that you need open market operations to do this. And so you're just a bad investor and shouldn't be managing anybody's money because you don't understand that. Or you're in on the Ponzi and you absolutely wrecked a ton of retail and pumped this thing to Bitcoiners willingly, loudly, tattooing yourself, and got a bunch of them wrecked. So are you a fucking idiot or are you a fucking scammer, right? I don't give a fuck either way. Classical ethics dictates either way, you're fucking out of here, right? This is De Niro with the slots manager in Casino, right? And the guy gets hit for 3 jackpots in an afternoon and he's like, I don't give a fuck, he's fucking fired. Like either he's too dumb to have this job or he's fucking in on it. Either way, he's fucking fired. And that's true of all these funds that made tons and tons of money on Luna. Jump made $8 to $9 billion last year, not on Luna, but on all their activities. I'm sure Luna was a hefty chunk of that, right? So I'm looking forward to deep investigative journalist activity and really deep regulatory investigation of all of the participants in this obvious Ponzi that has been running for like a year and that came to a head and was easy to forecast that it was going to blow up. Then you come to Do Kwon. And as you can tell, on April 3rd, I found a video of him on a recent podcast and I tweeted that out. And I said, Major Elizabeth Holmes vibes from this guy. 99.99% of the time when you hear somebody talking like this, they're a fraud. I left a 1 in 10,000 chance. I should have done 4 nines after the decimal point. Actually, should have been 1 in a million chance that this, maybe 1 in 100 billion, I don't know, that this guy wasn't a fucking fraud, but he was obviously a fraud and a scoundrel just by listening to him talk. And, you know, I caught a lot of heat. I got Pump coming at me, defending his Luna pumping and, you know, doing more softball interviews of shitcoin founders on his show so he can get crypto sponsorships. Like, fuck that, fucking scoundrel. All I want to do is boom, 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 and a pump and take your money, pump it up, fuck that. So, you know, the whole thing was just fucking disgusting. All the people that made money on it really should be investigated.
Talk to us a little bit, like you allude to like some journalists diving into this, some regulators getting involved in this. Like, talk to us about those two spaces. You come from a journalistic background. Like, what would you like to see journalists, or whether it's independent or one of the largest Bitcoin media companies in the game, as well as Swan yourselves, like, what is it you're looking for out of the journalistic side, and what are you looking for out of a regulatory side?
It's not going to come from crypto media, obviously. These types of investigations are going to have to come from financial media. It's going to have to be Wall Street Journal. It's going to have to be FT, you know, Barron's, stuff like that, like people that actually have like budgets and aren't sort of so aligned with the industry. Like, do you think Andreessen Horowitz's media arm is going to deeply investigate crypto scams when their entire fucking firm was turned into a crypto scam?
I'm going to go with no.
Yeah, they're not going to do shit. So, you know, is the block going to investigate it? No. Is CoinDesk going to really go hard at this? No. Like, these basically, you know, I shouldn't throw CoinDesk, interestingly, has some good Bitcoiners and some really good journalists that they've hired over the last couple of years. So it's interesting. I've had some very good conversations there, and they've willingly brought me back time and time again to talk about this. So, you know, shout out to obviously George Kaludis over there, who's a real Bitcoiner, and Christine Lee, who's a real journalist and trying to figure out what's going on here and asks good, hard questions of everybody. So it's interesting that they're building a pretty good org over there.
I don't want to harp on this. It does feed into a topic I want to dive into with you. But when you talk about some of these more traditional financial institutions investigating this, like a Wall Street Journal, is there not a concern that their lack of understanding of just the stark difference between something like Bitcoin and crypto could lead them to make false or incorrect conclusions?
They can, but then you can have that conversation. Like, these people aren't inaccessible. They'll talk to you. You know, Paul Vigna has been writing about Bitcoin and crypto for 5 years. He wrote a book about Bitcoin. He understands deeply that Bitcoin is very different from everything else. Like, you know, and he's a real journalist with journalistic integrity and training, right? He knows when a fact is a fact and like when an opinion is an opinion, and how to tell the difference between the two, which is something we don't get much on Twitter. It's a lot of opinions sort of marketed as fact, right? So yeah, I mean, some of these people are just good journalists. Like Tem Stenovec at Bloomberg is like a good journalist and asks hard questions when you're on a show and stuff like that. Like, I don't know. I have a little bit of faith that they'll come around. There's a lot of education, but education happens in a bear market. Education comes from digging in here and understanding the difference between Bitcoin and shitcoins. And I think you just got to jump all over these opportunities. We've never had a better opportunity than this one, really, in the history of Bitcoin, to shine a light on the difference between centralized VC pump shitcoins and Bitcoin. This is 16 times bigger than any other crypto scam blow up, right? I think OneCoin plus token both sucked in like, 2 to 4 billion. BitConnect didn't get that big. This was 60. This is basically the same size as Madoff. That was 65 billion. This is 60 billion. So I think it's a really opportune time for anyone talking about Bitcoin, even though you may hate to learn about shitcoins and talk about shitcoins. If you want to be useful to journalists, regulators, and legislators in explaining the difference, it actually makes a lot of sense to make this the one thing that you study up on, because the analogs between Luna and all the other shitcoins are very, very strong. The mechanisms are different, but the long con of Ethereum is very similar to what happened with Luna, because it's not going to work in the long run. It's going to take longer, but in the end, it's not going to work. Luna, it was obvious that it was going to blow up sooner because they got the Ponzi going like way, way, way too big, too fast. But in the end, these things are not going to work. And each one you can, like, we could outsource, we could sort of distribute the work and have like a couple Bitcoiners go deep on Cardano, a couple Bitcoiners go deep on Ethereum, a couple Bitcoiners go deep on Polkadot, a couple, whatever, blow up, explain why Axie is fucking stupid, explain why Steppen is going to fail just like BitClout and everything else failed before it. Like, I feel like they keep on saying like, this one is new, this one is different, this one is innovative, and it never fucking is. It's just a new marketing pump so the insiders can dump their cheap tokens, their free tokens later.
I love that. So beautifully said. I mean, we have hundreds of people watching, thousands of people by the end of this weekend will watch. If you're watching this, like, take it upon yourself. Like, I love this idea of like just different groups of Bitcoiners attack all these little shitcoin scams, call them for what they are, and like back it up with genuine facts that they won't be able to rebuttal against.
Just take the top 30. There's only 20 in there, right? Because it's a bunch of stable coins that actually are collateralized, whatever. So there's Bitcoin, collateralized stable coins, exchange tokens is probably 4 or 5 of them. Just knock out the top 15 shit coins basically, and that's like 98% of the non-Bitcoin market cap.
Where, in your opinion, does someone like Satan Respawn, Brian Armstrong, fit into this equation or puzzle of even giving the access to retail some of these like bullshit scams, but then also beyond that, like the very clear Coinbase pump and dump that has very consistently been happening in that space? Like, do they have a responsibility to start further vetting what they're listing off, or is it just, if people want to buy the garbage, let the people buy the garbage?
Well, I mean, I tweeted out last night or this morning that you can't have it both ways. Either you want to have no regulations for penny stocks and absolute scoundrels like Jordan Belfort, like marketing Ponzi schemes and bucket shop stocks to your grandmother, or you need regulation for shitcoins. And I'm totally fine. Like, Pierre Richard is like, just abolish the SEC, market solutions will come forward, and there will be like, guilds and associations that will rate these things, and like the market will do a better job regulating it than the government. And that's a principled, legit stance to take. But Brian Armstrong like hung himself out to dry like 6 months ago with that long Twitter thread, complaining about the SEC blocking them from offering yield products to retail, and basically saying like, why are we regulated when they're not? And it's like, oh, you really want equality of regulation? Look what traditional finance, look what securities have to deal with. You have a securities exchange. These are all securities with centralized teams. They're not decentralized in any way, shape, or form. I mean, what is the Celsius token? what is the Celsius token?
Yeah,
Like, it's
let's talk
company
about that.
script, right? So on their own AMA, they said that 80 to 90% of Celsius token is held by the company. And yet they're like putting out tweets saying, hey, Celsius went up 2,400% from like, 2018 to 2020 or something. How long do you plan to hodl your cell token? Right. And then they like aggressively encourage people to stake this thing for like 6 months. They try to get people to take out collateralized loans, posting cell token as the collateral, which is totally illiquid because it's a closely held stock, right? It's like one of these penny stocks that just pumps on, pink sheets message boards because the owner actually has 98% of the float and can like post a little capital whenever the other 2% tries to sell, right? So it's totally manipulated. And it's obviously a security, right? Like, it's controlled by the company. I listened to some of that thing on Tuesday, and he's like, well, we're leaning toward decentralization.
God.
What are you talking about? I'm
leaning towards being 6 feet tall, but that's just
you're gonna own 89% of the token instead of 90% of the token. Awesome. Yeah. Okay. Nice business. So I don't know. The Celsius one only caught my attention. Again, I don't care about these CeFi platforms either, unless they are kind of around the Bitcoin space. And he tweeted that, no one had more Bitcoin than Celsius because they had like 140,000 BTC or something. Obviously false, by the way, because Coinbase has way more, and so does NYDIG, and a bunch of other custodians have way more than that. Maybe he's gambling more Bitcoin than everybody else. And then what really caught my ire was their bragging tweet that they were smart enough in the day before the collapse of Anchor to remove $500 million of user funds from the Anchor protocol. That's an own goal, right? You're telling everybody that you're taking customer deposits, which, by the way, they market using the word deposit. And then in the fine print, it says, by the way, when we say deposits, that isn't meant to indicate that you're actually depositing anything. You are an unsecured creditor to Celsius. You have lent money to Celsius that we, with our trading operation, our staking operation, our DeFi games operation, will go try to trade and make money and then pay back rewards to you in the currency that you deposited, plus some company script, plus some cell tokens. So when you couple that with, Mashinsky's ridiculously sordid record of misrepresentation, his false claims about, being the founder or the inventor of VoIP, which a quick Wikipedia search will prove that's not true. His claims of having $3 billion of exits, a quick check on Google will prove that's not true. Claiming to have the most successful IPO of 2004 when he wasn't actually involved in the company, he'd been kicked out years before, not true. Claiming to have raised $300 million for Arbanet, that happened after he was gone, not true. His CFO getting pulled out of the company, arrested in November because of his close association with a criminal over in Israel named Moshe Hagag. I want to see a real journalist dig into Alex's relationship with Moshe Hagag. Why did he not know that his CFO was in like 4 business ventures with this criminal, right? And then, I'd like to see somebody go back and look at the ICO plans back in 2018. Was that a security? How did they market it? Like, and again, the only reason I care is because it's on the efficient frontier of potential to have an impact, a negative impact to Bitcoin, and shady as hell. That's what got me looking at stock to flow in the first place, right? Which is I've only done 2 things, gone hard at like 2 things, maybe 3. I went really hard at Nakamoto.com because Balaji is a piece of shit. And because that was bullshit, trying to say like, hey, let's all be friends. We're going to put this under a Bitcoin flag. And by the way, the moderators are Vitalik and Zuko. Like, fuck off. So I spent 72 hours, I call it Nakamoto weekend, January 3rd, 4th, and 5th, just pulling everybody's fucking card in the background and trying to make sure that couldn't happen. And that worked, and it fucking tanked, obviously, and rightfully so, because it was dog shit plan. And then stock to flow was way too fucking influential for something that was complete bullshit that would never get out of like a stats 101 class, like fucking joke. So yeah, I pulled that card and, was vocal about that. And there was nothing really that caught my interest that was like, potentially had again, on that efficient frontier of like out on this axis of having like a potential very negative effect for Bitcoin, and on this axis, you know, full of shit. And Luna was the next one. And now Celsius seems like the obvious third. And kind of Pomp has been like a minor nuisance all along, with softball interview infomercials of shitcoin founders. But otherwise, he's, you know, he likes Bitcoin. I like that. But the monetization through shitcoins and the, you know, I think just not top of funnel anymore, just keeping people fucking confused, sending them to crypto and giving softball interviews to crypto founders, just giving them infomercials, I think does Bitcoin a disservice.
I want to quickly remind everyone who's tuning in on Twitter Spaces that we are not going to be having any guests up. We are streaming this live on our YouTube channel. If you have any questions, feel free to join the conversation over there. We're going to take questions from the YouTube chat, as well as give away some free sats. Cory, I kind of want to, maybe we could start on the pomp of it all. Maybe it's better if we go through the lens of education with this, but I'm curious about what events like this Luna debacle have on those who are maybe not yet in Bitcoin, but are curious about it. And what do we in the community need to do to help them really understand and emphasize the point that Bitcoin is not crypto? They are not the same.
Yeah. I think you just have to post olive branches all the time. You know, I'm reaching out through my network and offering to explain this to people and posting helpful like explanations. Like I'm way more fiery on Bitcoin Twitter and like on a Bitcoin show than I am with normies. Like I'm just much more matter of fact and stick to the facts, ma'am. And like, you know, I've gotten DMs from over 200 Celsius members that have proven to me that they've withdrawn their Bitcoin from Celsius. They're all sending their screenshots because they know that Mashinsky is lying about not your keys, not your coins, right? He said that Bitcoin maxis are trying to get you to like lose your keys because it's good for their Bitcoin price.
I know that was
tweeted
wild.
This in public. Like the guy's
Absolutely
an absolute cartoon fucking villain. It's like Cruella de Mashinsky or something. Like, how can you skin the Dalmatians? Like, seriously, you're gonna skin the Dalmatians and make a coat out of it?
God,
what kind of fucking villain are you, dude? Seriously.
That's a meme that needs to be created.
Those are puppies, dude. You're skinning puppies.
Those poor dogs. But yeah, man, I mean, I could not agree more with everything you said. Yeah, it's bizarre.
So yeah, so I mean, I've got a dirty little secret that nobody on LinkedIn will ever figure out, but almost all my LinkedIn posts are Sam Callahan, our analyst. He's learned to write even tone wise and the shit. I think he speaks as Cory like better than I do. I mean, everybody knows that like half of Bitcoin Twitter is actually my alt accounts. That actually is true. But yeah, no, for real, it is Sam doing my LinkedIn posts for the most part. And he's writing almost all of the daily Bitcoiner too at this point, which is awesome. So that's my daily newsletter that features like one of the best pieces of educational content from the history of Bitcoin and related topics every single day. So we basically we've screened and chosen 1,000 pieces of content that we're kind of dribbling out one a day. And we add new stuff, obviously, as there's new timely great stuff. Like if Alan writes Bitcoin is Venice, obviously that's going in, that kind of stuff. Or if there's an amazing podcast that's relevant, we'll put that in and like put it in early in the daily Bitcoiner distribution as well. So check that out, cory.substack.com. And then on LinkedIn, it's interesting. Like the conversation's actually, I think it's helping a lot of people there now that Lowry is posting there a lot. Dan Held never stopped. He's always been posting on LinkedIn, and I've started posting, you know, every day. And I already I was like, you know, member 100,000 on LinkedIn because I'm old and I was in B school in 2002 when it came out. So, you know, I've built up a huge network on LinkedIn anyway, and you can have a lot of influence there. I get a lot of messages of people, you know, curious about Bitcoin, confused about blockchain. They got a blockchain certification. They did Pomp's crypto class. Like they're like trying to figure out what's going on here, and they want to learn about Bitcoin and they want to get involved. So I think it's good. I wish that I was, you know, young and hot enough to do some TikTok. I think more people should do some TikTok. And like, I feel like we all kind of gave up on the gram, but it'd be nice to get out there. And, you know, there's people questioning right now, right? Like their NFTs are down 98% in many cases, or just gone, or, you know, funds absconded with. The crypto portfolios are down 90%. And like the Bitcoiners are still here and we're still strong. And again, I tweeted this out last week. the communities for crypto disappear when the price goes down, right? Because the strength of a crypto is the community. Like basically here, this is what it was. I think the reason a shitcoin has value is because of its community, right? The reason Bitcoin has community is because of its value, right? So we ain't going nowhere because Bitcoin is the only one that's actually real. Like we're not friends because there's a pump. We're probably better friends when there's a dump.
Absolutely. The signal becomes so much higher when there's a dump in the bear market or whatever we're calling this.
Yeah.
That's when the work gets done. One thing that you mentioned that I want to go into is the incredible educational work that you've done. Really early on, you identified the need for high quality education in the Bitcoin space. And I think it's one of the things that is really remarkable about Swan Bitcoin and what you guys have done there. I mean, I remember when in, 2021, you would just be on Clubhouse, personally on Clubhouse, like 6 hours a day, just dropping knowledge bombs. And there are so many people that were helped by that. And that's just one tiny aspect of what Swan and you have done with regard to education. How do you think about that? How did that come about? How did you identify that as an area where there was a high need?
Well, I'm trying to remember who brought me on. Dev dragged me onto Clubhouse on like Christmas of 2020. So I think I joined on the 26th. And I think they just kind of opened the rolls on like the 20th. Before then, it was sort of very insidery and they were throttling it. And then they said, anybody that gets on can invite 5 people. So it was like you could do a tree of invites like very quickly. And all the Bitcoin rooms were full of shitcoiners pumping their, Wise tokens and NFT that and whatever. And I was like, oh my God, like there's literally no Bitcoiners here. It was Alex Thorne, who runs Galaxy Research, but back then was doing Fidelity Research. And then there was Terrence Yang, obviously, who now works for Swan. And there was Jeet Sidhu, who I think he's back at Fidelity on Alex's old team. And that was basically the people that were on talking Bitcoin and battling these people. And I was like, man, y'all need some reinforcements. So I just coordinated an invite tree. I started a Telegram group and I coordinated an invite tree and texted and messaged and emailed like every Bitcoiner we all know and made sure they all got invites, and we just flooded the motherfucker.
I'm imagining like a montage, like in like a war movie, like dee, 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 dee. Everybody's on their like little like Morse code machines, and it's like sending 100%. It out, and then it's like,
dude,
you see
SOS.
Yeah, exactly.
SOS. Yeah, because you could tell from the experience of social audio that it was going to take off. Right. And Clubhouse is still a great experience, even though obviously the Twitter graph, makes it very difficult for Clubhouse to compete. The experience on Clubhouse is actually a way more fun place to hang out. Generally, I feel like I have to be kind of saying pithy things because there's only, 10 or 12 speakers and you kind of feel like you got to bring the goods on Spaces. Whereas Clubhouse, you can just kind of say whatever the fuck you want because there's 50 people on stage. But back then it was all education focused, before everybody knew each other. And it was really like beginner Bitcoiner Q&A 24/7, because we were in the middle of a pump. The altcoins were pumping, Bitcoin was pumping. And, we had just gone through all-time high on, December 15th or something of 2020. And I think it was the 16th actually. Yeah, 16th. And we needed to be there. We needed to be there to answer questions, to invite people, to greet people. That's where I met Steven Lubka. I interviewed that dude. Essentially, I saw him work for like 500 hours before realizing he should be like head of Swan Private Client Services, because I just heard him like calmly answering questions on Clubhouse and being like a good dude. It's also where I found Dread, because like his voice was amazing. And he was so chill, man. He would just like the most aggro person. You could just tell in his voice, no matter what, that Dread was the alpha, and everybody would just back the fuck off and like the room would be chill again. I didn't find out for like 6 months that he was like the national pole vault champion of Jamaica. And I was like, oh,
he
of
never leads
course.
with that.
No, but his Twitter handle is pole vault dream. Like I should have had some kind of clue.
Yeah, but that could mean anything. I mean,
yeah. So like, just like, so I dragged him into podcasting. I didn't know if we'd ever end up doing anything with Swan or not, but like we sent him the gear and trained him on how to do it. I came up with the name for the show, One Love Bitcoin. I was like, bro, you have to have conversations with people. I should check. I don't actually know if we have anything to do with it anymore. I just knew that dude needed a show.
Well, that's something that I think is really interesting,
yeah.
is that like on Clubhouse, and I think I didn't really state this well enough. Like you really came in at a time when Clubhouse was just becoming part of the mainstream milieu, and you identified, as you said, that it had been taken over by shitcoiners, and you basically rallied everyone in the Bitcoin community who was really big on, who was primarily contributing on Twitter, and you were like, we got to get in here. This is the future. Voice chat. It's the shit. And everybody was like, maybe, is it really? And you demonstrated that it was. You created Cafe Bitcoin. And I mean, Cafe Bitcoin is the largest Bitcoin community on Clubhouse. And we're able to identify these people, these stars, bring them up. I don't think the significance of that in this bull run, or in the bull run, can be understated. I think
it was huge for sure. And by the way, I do have to shout out. I'm sure Lamar and Black Bitcoin Billionaires probably still have more members. I think it is probably more than fair to say, if they tracked listener hours, that for like all of 2021, Cafe Bitcoin was easily #1 for listener hours. Like we had really large rooms going all the time, basically for the whole year. It's obviously splintered a lot. We brought Cafe Bitcoin over to Twitter Spaces now with you guys every morning, 7 to 9 a.m. Pacific, 10 to 12 Eastern. Cafe Bitcoin on Spaces, hosted by Bitcoin Magazine, Swan Bitcoin, and your host, Alex Stanton.
Be too early, but shout out Alex. I see you in the crowd, but also way too early in the morning for us LA kids.
Homie, it's also a podcast. That's what Alex would say. You can listen to the podcast. Wait, Q, you're in LA. I don't think I knew that. Now we should just go ball together instead of just making videos for Twitter.
Dude, I'm so down. You tell me where. I just hang out by the beach all the time.
Okay. Yeah. All right. I'm down. Yeah. We'll find a day to go hoop for sure. All right. What's next?
So one thing I want to dive into that you mentioned earlier, you mentioned a comment that you made around Do Kwon, and you were like, yo, I'm getting some strong Elizabeth Holmes vibes. This is some bullshit. And I just want to tease that out a little bit more, because what was it about the specific communication style that sent up red flags for you? I'm asking from the frame of like, what should people be looking for who are just getting interested in Bitcoin? What are the things that, you'd be like, this is bullshit if you see this?
Yeah. I mean, ad hominem attacks when people bring real criticisms, calling people idiots, dodging questions, just acting cocky as hell. I mean, not to keep on dragging a dead horse into the convo, but the last time I saw somebody being so disingenuous, whose name wasn't Udi, was Plan B, right? Like he just claimed, you're a mean person, you don't know what you're talking about, like deflecting, blocking. Like that's the mark of a charlatan. You create an echo chamber by getting rid of all dissenters so that your echo chamber only sees confirmation. So it's just kind of classic cult building, basically. I'm the master of coin, I'm the master of stablecoin, stablequan, and he had some Bitcoiner supporters, and those date back to the foundation of Terraform Labs, because there were Bitcoiners working at Polychain when they did the seed round. So I think he's friends with some of these San Francisco Bitcoiners. He went to Stanford, and I think he had some air cover there. And, I think he was kind of able to weasel in a little bit with, I had a number of Bitcoiners subtweeting me with like long threads when I was attacking Do Kwon and saying things like, some people don't code, they're just marketers. Keep an open mind, let your brains fall out.
I'm curious.
To getting wrecked.
I'm curious because, like, despite Do Kwon's behavior, like there will inevitably be another person who attempts this or something akin to this. And I'm curious if you think these like detract from Bitcoin's overall growth, or if you think this is like a necessary cancer or a necessary like sickness that we have to like repeatedly fight off. It seems almost every cycle there's like
Well,
a new attempt.
Is Munib at BitBlock Boom and Baltic Honey Badger, or
There
is he
you
at
go.
Consensus Permissionless? What's his crew, right? And we already know that literally any shitcoin could have the exact same consensus mechanism that they have, right? There's nothing special about the Stacks shitcoin, right? It's just an enrichment scheme. It's a Bitcoin affinity scam, orange washing like a motherfucker. So, you know, I'd love to see some people with like deep knowledge of code actually put it together and like have the definitive, right? Like it's one thing to see Adam Back going back and forth on Twitter. It's one thing for somebody else to explain that any shitcoin could do the same thing, you know, that could mine their coin by, you know, you spend Bitcoin for it or whatever the fuck their mechanism is. Like, it's just obviously trivial and stupid.
Yeah, I mean, it's like it's a perpetual Ponzi, basically. It's
right.
I will say,
Ponzi, and it spawns dumbass shit like Miami Coin, which again isn't big enough to have an impact on Bitcoin. So I don't care. I called it a scam. I said you're all going to fucking look stupid, and Pomp came at me again. And obviously the shit's down 95% and was always a fucking scam.
Yeah, I mean, I will say, I think that there is some interesting technological innovation around Stacks. I agree with you though that Stacks is 100% the way that
there's interesting
used.
There's interesting technological innovation happening in DeFi that will one day be on Bitcoin.
Exactly.
There's a few things.
Yeah, 100%.
That's fine. But how are you marketing it, and what are you doing it for?
Yep,
you're doing it to enrich yourself.
Yeah, and right? Munib is like to the same thing with like Machinsky, Munib, all these people, they just dodge the question, and they will not answer, and they force, as you said, they force the frame using cult-like tactics to basically parry and sidestep when real technical questions are asked, or moral questions even, and it just ends in absolute tragedy. As
let's clasp hands and say a prayer for the Celsians.
Let's do it. I'm here for it.
Yes, may they escape their Mashinsky syndrome cage.
I remember there was a Clubhouse conversation many months ago where I was talking to, I think their CMO, and I was like, why does there need to be a token? This doesn't make any fucking sense. And he's like, oh, it totally makes sense. You just got to talk to Machinsky, like get in here. And jumped into the room on Clubhouse, and he just wouldn't answer the question. I was like, why is there a token? Why is there a token? Why is there a token? And his answer was, do you want to make more or less? And I was like, what does that even mean? And there was no good answer. It just didn't make any sense.
Mm-mm. Yeah.
So what do you, Q, it looks like you were sighing very eloquently.
I just, you know, it's such a hard situation, because you're like, you finally find Bitcoin which deserves your attention and your effort and your admiration, and you're making all these, you know, great professional connections, and you're going to war with an amazing team, both like my core team at Swan and the extended team of like you guys and Unchained and, you know, Casa and Spectre and Strike and all these guys like working their asses off for Bitcoin. And then you just have to be strong, because the outside world that doesn't understand the difference thinks you're part of crypto and associates you, you know, personally and professionally with like get rich quick schemes. And so, yeah, it's a hell of a sacrifice in a lot of ways. I envy the young people that get to just hang out with Bitcoiners and don't already have like large professional and social circles and wives and kids and all that kind of stuff, and school boards and all this shit, and having to explain what you do. And like, it's a real burden that people like, you know, mid-career or midlife working in Bitcoin have to bear, because there are a lot of personal costs. So that is one thing that you should be like really aware of, is it ain't easy. You got to put up with a lot of shit looking like you're close to crypto. It's one of the reasons that I like to be so vocal, you know, and never let it pass. And not once do I ever let an interviewer get away with saying Bitcoin maximalist without explaining where that came from, and that Bitcoin is not crypto. Not once do I ever let them say crypto without stopping the interview on fucking camera live and explaining that there's Bitcoin and there's crypto. Every single fucking time. Never give up.
I think one thing that I would say though is I think, you've talked very publicly about your own personal journey of like sort of being in the shitcoin space early on, and then coming to understand that Bitcoin was this completely different asset. And I think that, again, it's being able to distinguish between people who are genuinely here to learn, as you mentioned earlier. Like you were saying, like, look, when I'm talking with normies, like I'll have conversations with them, and you have like hours you'll spend just like sort of explaining the basics, answering questions when somebody's like, oh, what about quantum computing? Like, and you'll sit down with them genuinely. You don't just tell them like, hey, go fuck yourself. And I guess that's why I was asking the question around like, how do you distinguish between these scammers versus people who are just completely misinformed, who are worth, your time to sort of educate? I'm curious. I don't know. What do you think?
I mean, you can find out pretty quickly which one they are. Like, I'm in an ongoing conversation. It's going to take a long, long time with, I joined YPO like 6 months ago, and I finally got assigned to a forum. So I've got this group of like 8 people that I meet with for like 4 hours every month.
Wait, you got to define YPO for the audience.
It's a Young Presidents Organization. Anyway, it doesn't matter. It's just one of these like professional associations for executives or whatever the fuck. And I just wanted to do it for networking so I could orange pill the shit out of it. And there's a lot of crypto people in it, and they're all trading NFTs and stuff. So I just figured it would be a good place to go and do some orange pilling.
How far into how many sessions do you have to go before they start talking about like, blood boys and like harvesting the organs of the youths?
That's Skull and Bones. That's the Yale Club.
Right.
That's a different thing.
I got confused. All right, keep going.
Yeah, no worries. Or maybe there's WF. Anyway, so like I have a lot of empathy for someone that I met through IPO, because he's like just sold his company and he's like going straight to DeFi and working on like 2 protocols, and like, but he never studied the history of money, has only heard shitcoiner narratives about Bitcoin, thinks it's going to get shut down by governments because of the environment stuff, is Keynesian. So he believes that money can't be deflationary, thinks that the supply of money must expand to match GDP growth and population growth. And so he's never challenged the foundations of like what he's doing. He's just a good coder, and he's a smart guy, and he's well networked, and he's not a bad person, and he skipped straight to shitcoins. I thought it was actually hard to do that the last few years because the signal to noise ratio was way, way higher in a bear market and like an early bull market. And now I realize the echoes of like 2021, 2022 are exactly the same as 2017, 2018, right? Like OG Bitcoiners who came in like 2011, 12, 13 were probably looking at me in 2017, following the signals of the VCs that I always look to for signal, Andreessen Horowitz and Union Square Ventures. Union Square Ventures was all over like Ken, whatever. A16Z was doing every shitcoin. Like, I thought that was signal. Crypto Cannon. Oh my God, they hired Chris Dixon. He's working on altcoins. Like, this is dope. Like, what's going on? It's so cool. This is so innovative, right? So in some ways, I thought we had done a better job, or that it was possible to do a better job, and that we could help the people coming in during a bull run come straight to Bitcoin. Now that there've been, 3 big bull pumps of, 13, 17, 21, and each time has been like a crypto explosion, probably got to get ready for that again in the next one. It's very possible that we don't actually have cycles, and that cycles aren't real. And like, who knows, like maybe it's just like an aberration that they kind of match with halvings, by the way. And 1 or 2 data points doesn't mean that it happens forever, but there will be bull markets regardless in Bitcoin. It's just kind of the way it works. And it should be expected to work that way, that especially with a fixed supply, like there's nothing to suck it up. So I think we just have to be prepared, and maybe just be like a little bit more ready to siphon these people off and like point out with, I think toxicity worked for me. It doesn't work on everybody. Like, it absolutely worked with me. Like, I think everybody knows my foundation story of the thing that punctured my shitcoin bubble was meeting Jimmy Song at a conference in late 2017. And he was just looking around at everybody like he fucking hated them and wanted them to drop dead. And I was like, well, that's attractive. I should dig in more. I started watching his podcast, and that pointed me toward Andreas. And then Safe's book came out, and Marty and Stefan's podcast started. And like, eventually I got there. I think not everybody responds the same way. Some people want to be told that they're super fucking smart first, and then, steered gently. So anyway, I'm trying that with a couple of people. It's worked here and there. Like, I got a VC buddy that I've been arguing with about Bitcoin for like 4 years. And he called me on a Tuesday morning, like 2 weeks ago, and he had just taken a COO role at a Bitcoin miner. He had taken it the day before. He called me 9 a.m. on Tuesday. He was like, yep, you were right. I'm orange pilled. This is dope.
Did you make him join you on a video call so you could just dab repeatedly?
Yeah, exactly. No, but we'll definitely go and grab a Bitcoin lunch for the first time pretty soon. He's here in LA. So, everybody in their own time, we just got to, I think it makes sense to try to reach more people. It's all incremental. As Will Reeves at Fold says, we're all automatons now, recruited by Satoshi in service of the protocol. Like, we can't help but work on anything else. Like, there's not one of 60 swans could fucking imagine doing anything else other than work on Bitcoin. And I know you guys are the same. Like, how could you imagine not doing this with your life?
Yeah, it's like, do you want to have a legacy that is meaningful and contributes to the future, or do you want to drain the present of all possible value and hate yourself?
Bro, I got this new video ad unit. It totally drives 2% incremental engagement. It's selling for like $6 CPM. It's so hot.
And all you gotta,
we're gonna change the world with this ad tech banner.
Look, all you gotta do is you just gotta like find some orphans under a bridge and just like feed them into the meat grinder. But I mean, it's a high cost, but the dollars you make, I mean, who can say no?
Isn't that the WorldCoin white paper? The one with the orb that captured, like, I think it like extracts your eyeball or something and puts it in Mark Andreessen cereal or something.
Yep. It has like a little melon baller that just like shoots out like a little scorpion tail and just takes your eyeball out, and then you get WorldCoin. UBI.
Can you imagine being in like some fucking village in Sri Lanka or fucking Tanzania, and some motherfucker tries to make you put your eyeball up to this thing?
Yeah, people are like, I'm here because my government is trying to eviscerate me. Like, I need some unconfiscatable peer-to-peer money. And you're like, yeah, just look into this orb and get your soul sucked out. And by soul, I mean your eyeballs. Like, who needs to see when you have whatever the fuck token?
God.
Q, you look like you're talking, but you are very much.
He's only talking to Twitter Spaces right now. He's not talking to us.
He's talking to WorldCoin. Hit us with it, Q.
Thank you so much for your eloquent words. You're such a master with the way you put those together. I have so many wonderful images that will haunt me tonight. So thank you for that, P. I will say this, like my first time I bought Bitcoin was in 2019. I didn't really feel that bear market in the way that I'm feeling it now. As to both of you who have been in this space long enough to have felt like a bear market, seen the rise and falls of not only Bitcoin, but various cryptocurrencies. What are you trying to, I think, steer people away from? Obviously, other than shit coins, but like we keep making the same mistake is the point I'm trying to make. And like, how do we stop making this mistake of yet another shit coin spiraling up and then rug pulling other people?
Pete, you can answer that one first. I've done a lot of answering. I'm talked out.
All right. The question was, how do we prevent
get rich quick schemes? I don't think you can ever stop them. So as long as they're legal in crypto, they'll continue. The only thing that will stop it will be in jurisdictions that decide that they're not cool with that anymore.
But like, doesn't opening the door for like regulators to start to get involved with Bitcoin and crypto at large open the door for them to most likely do something like what we saw out of New York, where clearly no one understands what energy even is or how Bitcoin is mined, and as a result they're making legislation that's just more harmful to the Bitcoin ecosystem at large? Like, how do we try to balance that with regulators who are just dinosaurs who only care about their next election?
Well, Bitcoin mining is like incredibly anti-fragile, right? Because that creates massive opportunity for everybody else around the world. If you clamp down in New York, then it goes to Texas, it goes to Canada, it goes to Norway. Like, it's not that hard. That just creates opportunity. It's more money for other miners. So yeah, I mean, that's just New York shooting itself in the foot straight out, in my view. And it sucks for certain people that are operating in New York, just like it would suck to like, turn off on-ramps in the United States for Bitcoin, right? That would suck for a lot of Bitcoiners. It would suck for price for a while, but the protocol would march on, and there's zero chance of like all governments globally, clamping down at the exact same time and coordinating. Like, the game theory just does not support that. And it's getting further and further away as we speak, as the global order, disintegrates in front of our eyes. It's been a slow roll since the fall of the Berlin Wall, and it's dramatically accelerating lately, and it ain't going to turn around anytime soon. We're heading into like decades of fucking chaos, and the chances of everybody coordinating because we all just don't like Bitcoin. Well, somebody's going to run against you because they like Bitcoin and the people like Bitcoin. And if there's any democracy left anywhere on the planet, there will still be like plenty of fully legal Bitcoin. And I think we see that game theory playing out in El Salvador and a bunch of other countries now.
How does it make you feel to know that the house that Kobe built is now crypto.com arena?
It's disgusting. It's truly disgusting. There's zero chance, not zero chance. There's a very small chance they actually see the full 7 or 10 years of that contract.
The largest ever naming rights for any sort of arena in the world, I believe. So yeah. I don't think you're far-fetched to throw that out there. I'm curious though, because you see this influx of crypto in the sporting world. Every athlete wants an NFT. You have NBA Top Shot releasing different game highlights. You have different teams looking into NFT tickets now. How does Bitcoin get involved into that space when it seems heavily invested by crypto at large?
I mean, I don't think it matters at all. It's orthogonal. I mean, these things aren't decentralized. Obviously, the authority of the third party, the NBA, is what determines whether that little market has value. The story of every collectibles market is eventual saturation. Each individual collectible can be unique in its own, but then they just keep on making more unique things, and then the market crashes. So the market for NFTs will inevitably crash overall. It doesn't mean that there isn't still like a handful of really expensive baseball cards and some expensive comic books. Of course, there are a few, but like the market overall is just going to crash like crazy. I mean, comics are never coming back to where they were in the early 90s, right? Because if you had like a successful Superman line, it's just too hard not to make like 6 more Superman comic book lines. Like, of course you're going to. I collected Disney comics when I was a kid. Loved Carl Barks in particular, the guy that drew like all the Uncle Scrooge stories for like 50 years. And all if you grew up with DuckTales or watched on wherever it is, HBO or whatever now, like those are all basically based on Carl Barks stories. And, it was awesome because the dude like was a history buff. He was a travel buff. Almost every story was based on like a National Geographic story that he had read basically about some place in the world. And then he would he had the mechanism of Scrooge being the richest guy in the world. So you could basically do whatever the fuck you wanted because he could foot the bill for any adventure. Right. So like, that was dope. And I was like, this is awesome. These shits are the shit. I'm going to get all these dope comic books. I'm going to have like millions of dollars when I'm older. And, they basically cost the same now, like a mint vintage, 1988, 1990, Uncle Scrooge comic book in mint condition costs like 50% more than it did from the newsstand. Yeah.
Look at that store of value holding up.
Yeah. It's about as good as gold, actually. So yeah, I'm actually doing okay. I've given them all to my daughters now. So I don't care. They can rip them up if they want to. They're just destroying them upstairs in the playroom right now.
Do you give it to them as like, this is the parable of Scrooge McDuck? And you like hand it to them and you're like,
no, I
the seminal text.
Do. Absolutely. Hang on one sec.
Well, while Cory goes to get his copy of Scrooge McDuck, I want to remind everyone
Absolutely.
that tickets.
Very important, you know. So some of them I don't actually hand over. Some of them I have to keep under wraps. Like this is the life and times of Scrooge McDuck, the 13 episode series.
Oh, fuck yeah.
You know, so you got to keep those ones under wraps. But you know, the lesser collectibles, they can go ahead and draw on and put stamps and stickers on and shit. But yes, that's basically what will happen. I think you know, everything that Gary Vee has done to essentially just like destroy his reputation for all time by scamming the shit out of people for the last year and a half has been hilarious and sad to watch. You know, everything Chris Dixon is doing is just hilarious and sad to watch. I used to read every post that guy wrote, and he's like the king scoundrel at Andreessen now. Really all of this whole fucking Bored Apes Yacht Club thing, by the way, is literally just manufactured by Andreessen and CAA. Like they're giving the fucking money to the celebrities so the celebrities can buy the apes.
100%. I mean,
they're not fucking buying apes, obviously, dumbasses.
And then CAA can get their 10% commission.
Yeah, and package them into shows and sell them off and like do whatever. Like it's all manufactured. Again, it's just orthogonal. It doesn't matter. I mean, I fine with this stuff not being on Bitcoin. I don't care.
Oh, sorry. Do you feel like the chickens will ever actually come home to roost? Because there's a, you know, quote, I forget who said it, but it's like inside every cynic is a heartbroken idealist. And I definitely identify as a Bitcoin maximalist. And I, you know, am less eloquent than you are and going in and having some of these debates with shitcoiners. But I wonder if people like Gary Vee will ever actually be called to task. I feel like there's so much obfuscation and so much.
Cory, if you want, I will gladly arrange and set up for a debate format with you and Gary Vee. I have a line into him. I weirdly do. Just you tell me when, and I will do it for you.
That's an interesting one. That would be really interesting. He has shown an unwillingness to engage genuinely on Bitcoin the few times that I've seen it. He just kind of punts, and it was so obvious to him that he had after having talked about collectibles for so long, and then, you know, having done social media for so long, like he's the perfect weapon for this scam. Literally the perfect weapon.
Yeah, I mean, the Gary Vee friends thing is just abhorrent.
Yeah. So yeah, I'm not sure what that would serve. I guess it would be good to grab a bunch of his audience and expose them to somebody talking eloquently about Bitcoin and kind of explaining what the NFTs aren't decentralized and stuff like that. So yeah, maybe we can talk about it.
I'm learning in real time.
I haven't seen him since I haven't seen him since he hosted like a wine gathering for Google employees in like 2011 at his office. Actually, it wasn't even his office. It was that Raptor. What was it? Raptor Ventures or something. Jim Pilata, the guy that part owns the Celtics, has an office right there in Manhattan. He's friends with Gary, and he used to do wine parties there. Anyway, dude was sniffing his own farts when he was talking about shitty red wine. That's all I remember.
Cory, I want to ask you, honestly, what has become my favorite question to ask to any guest. I know full well this is not your space, and I'm going to default and say that this was genuinely a question that was asked by someone on Twitter when we announced that we were going to have you on the show today. I'm curious what your thoughts are on just the correlation that we've seen between Bitcoin and the public markets over the last few months in particular. I want to start there, and then I want to throw a theory that I have out at you and hear your thoughts on that.
Sure. Yeah. I mean, it makes a lot of sense that it would be, because so many people with large portfolios in traditional markets have added Bitcoin, large positions in Bitcoin into their portfolios. And for them, it's, you know, it's something that's risk on. And so when risk is off, they sell off their Bitcoin along with their other risky stocks, kind of, you know, flight to value or whatever. So of course it's going to look correlated because of the new market participants in Bitcoin. This comes with having a higher market cap and a higher price for Bitcoin. You're going to correlate in the short term with the Qs, right? We've seen 95% correlation with the Qs for like 18 months now. in the long term, there are just going to be idiosyncratic things that happen with Bitcoin where maybe the Fed loosens and stocks go up a bit, but Bitcoin goes up 10x, right? Or something happens like, some major nation adopts Bitcoin and there's just like a run, or there's, another, bail-in Cyprus style, but it's a larger country and it makes people around the world finally wake up. Or, regulation comes down on shitcoins and everybody who's interested in crypto has to pile into Bitcoin. And then they start building on layer 2, 3, 4, and people realize it actually is the internet of money, and that's where all the innovation is going to happen. And we just stop arguing about this dumb shit. So there's a bunch of different things that could just be, sparks for massive rises in price. But yeah, in the short term, if you're zoomed in, it makes a lot of sense that it would be heavily correlated with tech stocks.
Okay, cool. So I'm now taking it that we actually see things in the same way. I've been a very big proponent saying that it's just these funds that aren't publicly traded. They're not going to have to disclose them buying or selling their Bitcoin stacks, and their stacks might look like a whale moving things, but ultimately, like, we keep thinking, oh, whales are selling or whales are buying. It's probably one of these funds. I'm curious now because, when Do Kwon announced Luna's plan to back Luna with Bitcoin and they're buying up Bitcoin, that coincided with both a run up from Bitcoin's price from about 40K to 44, as well as we saw the NASDAQ make like a dead cat bounce from lows to a weird short-term high, and then sell off ensued and everything. The most recent sell off then also coinciding with Do Kwon having to unload some Bitcoin. I'm curious how much weight you actually put on that moving the Bitcoin price versus just the broader market participants, chiefly the big money moving the price up and down.
So here's how I see it. Go on swan.com and sign up for an automatic recurring purchase plan. Set it and forget it. Make that decision once and stop fucking worrying about price. All sats are cheap under $1 million a coin. You got to get people to like not give a fuck. Like, honestly, all this TA masturbation, I'm glad that the market has given the lie to it. At least we can get rid of that. The on-chain stuff was getting way too much fucking hype. It was crossing over into like S2F territory late last year. It was fucking embarrassing. And I'm glad that basically everybody looks like a fucking idiot now.
I really, really tried during Bitcoin 2022 to call some of the on-chain segments. The tea leaves never lie, but for some reason, people involved were not into it.
Well, the problem is the on-chain metrics that do a decent job always have price in there somewhere. And then the model adds noise to price. So it looks like it has a high correlation, but all you're actually seeing is noise around the price signal. And in that respect, it's not that much different than S2F.
Interesting. I mean, I guess, yeah. I agree that there are, or with what Q was saying, I think a second ago, which is that there are some interesting things that can be derived or attempted to be derived from on-chain data.
They describe the past.
Yeah, exactly. Describe the past.
They're fun for, it's great. Like, listen, there's some cool shit. I will absolutely tweet out some Glassnode shit. I'll put it in my fundraising decks. Sam fucks around with on-chain stuff and finds cool things to describe what's happened and what's happening. And it goes in Swan Private Insight. Tomer looks at it sometimes. Like, there's definitely some cool shit, but like, it doesn't predict the price. The price is the fucking price. And you don't know what's going to happen. So just buy and fucking hold every single day.
I love the idea that price is the noise in on-chain analysis. Like, if
price is the signal in on-chain analysis, all the other factors are noise.
Oh, interesting. Okay, yeah. Got it.
Well, there's also a case to be made, though, that even the price itself has noise baked into it because everything is getting priced in USD. Like, look, I fancy myself a technical type of person. Like, I'm an astrology buff, clearly.
Oh, like, you read those tea leaves? You into those tea leaves?
Every morning I read the tea leaves after my cup of tea. Like, you know how I do it, P. But God damn it. To your point, like, I even sent a tweet out today where I was like, look, just because something looks oversold, historically speaking, that doesn't necessarily mean it's due for a reversal. It can still get more oversold. And actually, if you look at things historically, they never are done selling off when you think they should be. I always fall back on the idea that a lot of more basic technical things are rooted in human psychology. And like the way we act, unfortunately, like it hasn't changed. You could read Marcus Aurelius's Meditations and realize that like humans 2,000 years ago actually like operate to a same capacity like socially as they do today, with the exception of the fact that we're all digitally connected and don't have to necessarily be there physically.
If you can recruit enough people to your line, you can trade it, right? Like Fibonacci's are a meme, obviously, but you can trade it because enough people trade it. So
That's so valid. Like
if you long the bounce off the line, 7 times out of 8, you're probably going to make a little bit of money, but I don't trade, it's not what I've spent my life doing. I learned other things.
Full disclosure, there's never been a moment I've sold a single sat in my entire life. I do talk technicals, but I fully buy into this idea that just buy it and don't think about it. DCA, I do an hourly DCA myself. Yeah. But I also think
so let me throw you a bone here, because I watched probably more TA stuff that first year of being like Bitcoin only. It's probably not more, but maybe like 30% of the hours that I spent was like YouTube TA shit, and like 70% was educating myself about Bitcoin. Once you get into an asset that moves like that and it's 24/7, like it's so fun, it's so addicting, right? And I was trying to time my buys, and it was only like, I remember exactly what the moment was. It was like with my family in Palm Springs, and it was like a Saturday morning, and my fucking Delta app or Blockfolia app thing went off at like 5 a.m. and like a crackhead, I went and like got my phone and placed a trade, and I was like, oh my God, I'm a horrible person. That was it for me. Oh, no. that was like and I was also trying to like time buys, because I still wasn't just like, I still had cash on the sideline though, and I don't have much of that anymore. But in like the run up in 2019, I was trying to like wait for like one more drop. I was like, there's no way it's going to pound through 4K here. Like it's going down one more time. I'm going to put this money at 3,600. And it was like that one candle on like April 5th or something. It went straight to 5,600 or something. And I was like, fuck, like I could have had 10% more Bitcoin or something like that. Like, it's pretty funny. So I empathize, and it was the best thing that ever happened for, not the best thing that ever happened for me, but like one of the things that's made life way easier for me in the last few years has just been on automatic recurring purchase and not thinking about it. And yeah, obviously if like one of my old startups like exits and I get a chunk of change or whatever, I'm putting that into Bitcoin as fast as possible. But I just don't worry about price anymore. Now, I will say that 29K feels like 6K in 2018. And that does worry me. I hope that the market has matured and that there are enough people that recognize the value of Bitcoin that, there's a bid here forever, and there will like always be a bid at 26 or something. But I do worry, like we bounced off of 6 the whole damn year of 2018, getting closer and closer and closer to it. And then the bottom just fell out and we were at 3. And, I don't know. It'll be really interesting if we actually have that kind of, max pain, because I don't like, we're all still happy and fun and, jovial on Twitter, and their Telegram groups are active and people want to go to conferences and stuff. Like, it'll be really interesting if we see, Bitcoin has never gone below its previous cycle all-time high before. And it's not it's not a mature asset until it does, right? You're going to go below the highs of previous pumps in the future. Might as well fucking get used to it. I don't want to see it this time, but like next time I'm cool with it. Like I actually would much prefer we like stay at 29, go up to like 150, and then like come back to 68 and then go up again. Something like that would work for me. I don't want it to go below the previous all-time high this time. I think that would be like super depressing, but I have no problem. I have no problem with the next pump then coming back like below 69K.
For a second, I thought you were a bear there. I was getting very concerned, but I'm glad to.
No, I'm actually Ben Carmen's coming out here to shoot all the bears on my property this summer. So that's going to be awesome.
That's good.
Man, Hang on, I was just reading some tea leaves there, so I have to
Bro,
share
shut up.
this.
This is the most price talk anybody has gotten me to do in 3
Dude,
years. by
it's
the way.
all Q talks about. I love you, Q, but
Look, I'm that jackass. I know I'm that jackass, but I kind of recognize that for most people who just get in, all they are looking for, all they want to do is talk price. And to make them understand like price genuinely doesn't matter. Totally valid point. However, on the topic of price, I just had this conversation with my dad at breakfast this morning. So only reason why I want to genuinely ask you this, because I have a hard time believing we'll go below the previous cycle's high just based on historical precedent that can obviously literally change tomorrow and it doesn't matter and it's all negated. And a lot of people say like that 14,000 number coincides with the 80% drawdowns, which we have seen historically. But also, I think all of us are on the same page that eventually the volatility will become more muted over time. Mm-hmm. And so if we start seeing, instead of 80% drawdowns, we started seeing 65% drawdowns for a couple of cycles or 4-year, 2-year pumps, whatever you want to call it, would that not start to actually help solidify some of our root base case arguments? Or are you saying like, we're not ready for that yet? We still have so much more runway to grow.
I mean, we'll definitely get there at some point. I just don't know when, I mean, I think we will see for sure, reduction in volatility. And that will obviously be sort of coinciding with the spread of Bitcoin as a medium of exchange. Like that's kind of where I see things going. I think, for me, just ballparking it, I think it's like $20 trillion market cap, $1 million a coin. That feels like when we're going to see, a lot of people using Bitcoin as a medium of exchange. Like right now where we are in 2022 is the people who are using Bitcoin as a medium of exchange are people in developing world who actually have like real use cases for it, like in Nigeria and a few other places. But otherwise, it's basically only sort of like the homebrew computing club, super lightning fans like Plebnet and Bitcoin companies and OGs that basically had conviction about Bitcoin quite a while ago, probably 8 years ago, to the point where like 95+% of their net worth is Bitcoin. And so they're really interested in spending that Bitcoin. So I think, the next wave of people who will be wanting to spend Bitcoin will be like 2025, 2026. It'll be the people that had conviction about Bitcoin in like 2016, 17, 18, bought a lot of Bitcoin, ride it up quite a lot. It's most of their net worth. They're looking for ways to just like kind of decrease friction with the fiat world and kind of live on a Bitcoin standard. That's why I personally, I place a lot of bets on Lightning companies and invest in, the seed rounds of all these Lightning companies. And it's why we're building a Lightning wallet into the Swan app later this year. And, I just think it's important to be early, but you got to have a little bit of patience, like we're still early in Bitcoin as a store of value. It's a tiny market cap versus where we're going. Like $100 trillion is like 200x from here. Like we've got a long way to go before it's a mature store of value. So I just, try to have some equanimity about it and understand like, is just a lot of noise coming from journalism land over here and traditional finance over here and shitcoins over here, and like just stay the course and keep building.
So Cory, what is something that we have not talked about? Like, what is the thing that we should have asked you about because it's super interesting that we didn't?
Well, obviously the Pacific Bitcoin Conference.
We were getting there.
We only have like 7 minutes. I got a call at 11:30 Pacific. So.
Okay.
we should
Are you
hit us with it?
Cool sharing when? I know that.
Yeah. No, it's done deal.
Details.
We signed it. It's November 10th and 11th. So it's Thursday and Friday. And the 11th is Veterans Day. So you only got to take one day off work to come. Bitcoin Magazine is the official media partner and is bringing the Volcano desk and the whole crew. So we're just going to have a big LA party. Y'all rug pulled me in 2020 and 2021, both of which were supposed to be in Los Angeles. I had a whole like LA Bitcoin week planned leading up to the conference. All this, like, we were supposed to launch Swan at the damn Bitcoin conference in 2020. I don't know if you guys knew that. It was supposed to launch on March 27th. And we couldn't launch the company at the conference. But
I'm so sorry. That must have been like the worst moment to try and launch a company.
Yes. No, it was great because all your early customers are super happy.
Oh, that's a good point. Those cheap stats.
It was the best possible time to launch Swan because everybody was like so happy for like a year and a half. Now they're like, so Stefan, I've been listening to your podcast. I don't remember that one about 28K Bitcoin.
Nice.
Anyway, but no, it's going to be so much fun. Honestly, we got the Barker hangar at the Santa Monica airport. Amazing stage, amazing acoustics, so much fun for activations. I think this is going to be like a hangout with Bitcoiners, super fun conference. We have so many cool things to do already planned. It'll be very memorable. So I would make it happen.
I need to ask, this is going to be like a West Side LA thing, right? We're not venturing to downtown or any of that stuff.
It's a West Side LA thing. Yeah. Go ahead.
I knew I vibed.
No, it's at the Santa Monica airport.
No, the moment you said that, I was like, you're not going to throw a random event in West Hollywood now. Like, that's going to take a whole day to get there.
Wait, it's literally at the airport.
It's at the airport.
No,
yeah.
Santa Monica airport's not what you're thinking. Like, I go play soccer at the Santa Monica airport.
All right. All right.
It's where Harrison Ford like tries to land his plane and crashes into the golf course every once in a while.
I'm in.
It's awesome. Yeah. So yeah, it'll be a blast. And then also come in the weekend before. The entire Swan team from around the world will be there the whole week. And, we've got, I think, 7,000 square feet of office spaces across like 15 suites in the hangar. So we're going to let like sponsors and Bitcoin friends come, super fast Wi-Fi. And we're all going to kind of just like work there and hang out Monday, Tuesday, Wednesday, getting ready for the conference. And we're going to do this every year. So every year, Bitcoin globally descends upon Los Angeles for a week with the conference on Thursday and Friday.
I'm here for it.
Packbitcoin.com, PACBITCOIN. And it's also PackBitcoin on Twitter. But we'll have ticketing up like, I think next week. Just figuring that out with making sure we can accept sweet sats for those few people that don't spend their dirty fiat first.
Love that. You heard it here first. November 10th and 11th here in Los Angeles. Come for the whole week. Come party with Swan and everyone else who's going to be flocking to LA. I guess
there will be a basketball court at the conference, by the way.
Oh, are we doing a dunk contest?
No, I'm more of a 3-point shooter at this point. I haven't dunked since 2014, and I realized that I had my first daughter later that year, and that's probably why. I kept on thinking I was like going to do the squats and the box jumps and like dunk one more time, and I just don't think it's going to happen. It's so far.
I got an idea for a 3v3 like basketball tournament, and we should.
There's somebody doing it. There's somebody doing it. Yeah, no, there's like a basketball tournament guy on Twitter. I got to find his handle, but yeah, there's like a Bitcoin.
Let's do it because let's talk. We'll talk offline, but definitely want to get some NBA
we sponsor the Compton Magic now too, the #1 AAU team in the country. So the whole squad is going to be there, all 3 ages. So it'll be like 36 dope basketball players that can wave at each other above the crowd of
men.
Bitcoiners. Yeah, it'll be fun.
Awesome. Cory, I know you got another meeting. I want to give you the chance to like actually get settled. Really, really appreciate you joining us and just all the work you're doing to, help educate everyone out there. Remind everyone sort of the website, the Substack you shared, and other places they can stay up to date with what you're sharing and posting about.
Sure. Well, first, we talked a lot about education, and I think the product we put out a few months ago, the Canon, so swan.com/canon, CANON, is truly amazing. It's a great place to start people on different aspects of Bitcoin. So you can we call them rabbit holes. So like Lynn Alden put one together on energy. You've got like Matt Odell putting one together on privacy. And so you can kind of explore that and send that link to different people. And you've got like the authority of somebody plus them curating the list of resources, and it's topical, right? So there can be like a Bitcoin 101, but there can also be something on like discrete log contracts and have like 8 articles and podcasts about that topic. So I think that's a really great resource that more and more people are using and linking to, and I think it deserves some shine. And then otherwise, yeah, my daily Bitcoiner is cory.substack.com. The Swan Bitcoin newsletter is a great source of information. There's original content in it every issue. So that's just swan.com/newsletter. It's 230,000 people, I think, get that now. So it's definitely been growing a lot, which is awesome. And then I'll just tease something that you guys are also heavily involved in. We'll be putting a lot of press out about this, but in June, Hard Money launches, which is the first network quality Bitcoin news show, and it's being produced by Swan and Bitcoin Magazine. Natalie Brunell is the host. We teased one episode and released it already. It has special reports that are more like hour-long versions, and that's so Hard Money Kaiser is when Max and Stacy go and do something. So you guys aired that with him and Ricardo Salinas, and there's a few more of those in the can already and planned. And yeah, I think it'll be a big deal, and we're going to get syndication for it and have it be on, you know, cable and OTT networks and stuff like that over time. So I think it's important for us to be able to put you know, the type of stuff that they're used to. You know, she's a good journalist. She's an Emmy-winning reporter and anchor. We've got an ABC News producer in there. You know, the whole staff, the cameraman, everybody has like network news experience, and we're just going to really try to like level it up. And I'm really excited to be working on that with you guys. It's airing on Bitcoin Magazine. So we're shooting it in the Swan studio over in Malibu, but it airs on Bitcoin Magazine, and it's coming out in June. So look for that.
Fantastic.
Love that. If you guys did not check out the first episode, be sure to check it out with Max Kaiser, Stacey Herbert, and Ricardo Salinas. It was an awesome shot. Like, they're just hanging out in their jet. I believe they were flying from Mexico to El Salvador. Everyone saw those pictures circulating online when Ricardo Salinas sat down with President Bukele. So be sure to check out that link. It is available on, I believe, on Bitcoin Magazine's YouTube channel.
Yep.
And guys, we're going to go to a commercial break. We're going to be joined by Jimmy Song after this. Cory, you are late for your meeting, and I am so sorry.
No,
I hope
fine.
you will come back and join us again soon, though.
I will.
And everyone on Twitter Spaces, be sure to click the link and pop over to YouTube and join us for our conversation with Jimmy as we dunk on
Tell Jimmy I said hi,
wind.
by the way. I did my first Jimmy Song podcast ever a few days ago.
Oh,
so
nice.
That should be coming out in the next couple of weeks. But yeah, it was really fun just kind of telling his version of going to BlockCon in late 2017 and how unmemorable that was for him, and my side of it being somewhat more memorable. It's a good pod.
Everyone be sure to check that out, guys. Awesome. Cory, you're the man, dude. Thank you for joining us.
Thanks, guys.
Thanks so much.
Peace.
Back. What is up, guys? Thank you for sticking around through that commercial break. Just a quick reminder, tickets for Bitcoin 23 are on sale now. Ticket prices, I believe, have gone up. right? So, oh, they go up at midnight. They go up at midnight tonight. This is it. Like you are in the final 12 and a half hours. No, 9.5 hours until ticket prices go up. You can buy with Bitcoin GA tickets for $250. They will never be cheaper than this. Lock them in now. And before we get started with our special guest, Jimmy Song, I wanted to highlight the fact that we just launched on the Bitcoin Magazine store a new Pizza Day shirt. This shirt was designed and put together by young Gucci T himself, Tommy. Be sure to check it out. I believe we had an ad that we will play or did play, or it's on YouTube somewhere. Check it out at the store. Use promo code FOMO. But now we are joined by none other than Jimmy Song. Jimmy, how are you doing, sir?
I am doing great. It's not quite pizza day yet. I think that's Sunday, but I know you guys are trying to get some of that stuff done before Sunday because I'm sure you're not broadcasting on.
Oh, we are.
You are.
Okay.
Okay.
Those of
no
us
rest
who
for the
don't have
best,
life.
Jimmy. No rest for
All
the
right.
best.
I will not.
All right.
I
You
will-
guys never rest then. All right then. But yeah, I'm looking forward to talking about all of that stuff because obviously I have some thoughts on it.
Well, I want your thoughts because when did you first come across Pizza Day, and like what were your initial thoughts in the early days of Bitcoin of like this transaction even happening?
Yeah, so I discovered Bitcoin in 2011. So by then, like Pizza Day had already happened. And I remember registering for the Bitcoin Talk forums in I want to say like May of 2011. That's when I registered for the forums. I still have that account and I've gotten airdrops because of that account and so on. But I remember one of the most popular threads at the time in May of 2011 was, hey, there's this guy sold some pizza for 10. It was like this super long thread, right? And I was like, what is this thread and why are people talking about it? Went back to the first one, read through it. I was like, oh gosh, he sold it for 10,000 Bitcoin. And at the time, I remember during like that June run up, it was kind of like, oh, okay, like this actually starting to be real money, right? Like it's like 10,000 Bitcoin, even back then when Bitcoin was like on its way to $30, like $10, you're like, that's like $100,000. That's a lot of money. That's what I was thinking at the time. And then, I revisited the thread again, I think in April of 2013, when it was on its way up to $266. It would hit like $100. I'm like, wait, that's like $1 million. And that's what people were commenting on. It's like, wow, this happened like, a few short years ago. It's like worth like $1 million. And at that time, like that seemed like a lot of money, right? Like $1 million. Oh my gosh, Bitcoin, like this internet currency that nobody is paying any attention to is, like some guy, $40 for pizza now has like $1 million. So that's what people were thinking about. And that's certainly how I was viewing it back then. And of course, like a lot of the things that I talked about in the article, I was feeling at the time, like very early on, even in 2011, 2013, 2014, whatever, it was always sort of like this tinge of envy, thinking, okay, like, why couldn't I have been that guy, right? Like, what the heck? And that's what led me to write that article.
Like, I can only imagine the level of regret that Laszlo is going to feel when Bitcoin inevitably hits $1 million a coin. Like that's a lot of money for 2 Papa John's pizzas. And I want to, for those who are not as familiar with the story, the key differentiator here is Laszlo, the person who essentially paid for 2 Papa John's pizzas with Bitcoin, did not pay Papa John's for those pizzas. He paid an intermediary who went and ordered it on his behalf with US dollars. So that intermediary has received all of that Bitcoin. Now, there's an interesting thing you kind of bring up in your article, though, and it's like the idea of the conviction to hold and really holding your Bitcoin over years. Because realistically, not every single holder has bought from 2011 and held the whole time. There have been periods of selling and buying and so forth.
I'm curious, what are your takeaways from the Pizza Day example, and what maybe some newer Bitcoin buyers should be looking to for lessons from that?
Yeah, I mean, there's a lot of lessons there, really, because we look at Laszlo and we sort of laugh at him because we know how it all plays out. But back then, it was anything but certain, right? He pioneered sort of like GPU mining, and he's a programmer. He knew how to program GPUs, and he realized he can get a significant speed up in hash finding by using the thousands of cores that a typical GPU card has. And a SHA-256 algorithm isn't that complicated. And if you take each of the cores of a GPU and make it do a SHA-256, it's going to be a lot faster than having a single core, or even a 8-core processor like that can only parallel at eight things at a time. And of course, like ASICs do way more than that today. But that was the idea. Was he had pioneered this thing, and he had been GPU mining for months at that point, and he had accumulated a sick number of Bitcoin, right? We tend to look at him and say, oh, he's going to regret this or whatever. The thing is, he didn't actually understand the value prop of Bitcoin at that time, and very few people did. In fact, I would venture to say almost nobody did in May of 2010. And this is why I point out in the article, there's almost no chance that you would have held, because like 10,000 Bitcoin at that time actually wasn't that much. A lot of people had 10,000 Bitcoin. In fact, the guy that bought the pizza for him through Papa John's, I think he was based in Europe, and he figured out a way to order the pizza online and like send it to him, and used his own credit card. It ended up costing him $41. The guy that bought it actually sold the 10,000 Bitcoin when it got to like 4 cents. So he 10x'd his money, right? He bought the pizza for $41, and he sold the Bitcoin that he got for it for like 400. Like, he 10x'd his money and he got out. And you can read Pete Rizzo's article from a year ago on Pizza Day, like to understand exactly what happened to that story. That was completely common, right? Because that's what people thought it was, and it really wasn't until I would say like October of 2013 that people realized like Bitcoin isn't just for payments or the dark web or something like that. That was really when a lot of the sort of like holding mentality and stuff like that came in. There just weren't resources to do it, and a lot of people like look back in retrospect and think that like they would have been smart enough to understand it. No, you wouldn't have. In fact, almost nobody understood it back then. And the few people that I know from 2010 that actually held, from 2010 all the way up to now, there's a few people that have done that. All of those people, like, it's instructive to me. All of those people like came already kind of wealthy, and they knew what they saw, right? They understood how this would play out, and they were extraordinary people in other aspects of life. They were already extraordinarily wealthy, and they understood it, and that's why they were able to keep it. Which is a little bit. It sounds kind of unfair because kind of the rich people understood it and like the poor people didn't. But that's like, this is the virtue that you needed at the time to have that conviction to hold. Is I really understand what this is, and I know where this is, or I know where it might go, and therefore I'm not gonna like mess around with it and buy alpaca socks for 10 Bitcoin or something like that. Lots of people did that, right? And that's the thing. You got to be like there's a lot of learning that's much easier now than it was back then.
I think the other thing that's important there is that a lot of people who are that wealthy or were that wealthy then, for them, it was like investing in like art. It was like they were already viewing it as like an illiquid asset. So they're like, yeah, I'll put like 0.00% of my net worth into that thing, and I'll just leave it, and it'll probably go to zero. And then later they're like, oh shit.
Well, I would say it's maybe less that, at least as far as I like the people that I know anyway.
That was a very graceful way of saying P.
Yeah,
You're absolutely wrong.
Well, no. I mean, like at least the examples I was thinking of, but when I've talked to them, it wasn't, hey, this is a hedge or something like that. The people that got in really early, they tend to have, well, first of all, most of them were libertarians, otherwise you wouldn't have heard of it, right? So there was sort of like this libertarian understanding of money. And they already kind of knew, like, economically roughly what things meant. So having a fixed supply cap was a very attractive proposition. And that was one of the reasons that they got in. And you talk to any early holder that kept it, they all cite the 21 million as the reason why they kept it. Was, oh wait, if this is strictly limited, then like I should at least hold some, right? Like that. Now we have like all of this theory because Safedean's expounded on it with the Bitcoin standard, and DJ has, and many others. And there's now all of this sort of like deep understanding of the economics of money and why Bitcoin works and all of that. And it's been popularized through many books and so on. But back then, like, unless you happen to be like to have that like framework in your mind already, and let's face it, not that many people did. It's become more popular because of Bitcoin. But I mean, 2010, 2011, if you weren't libertarian, it was kind of a miracle that you got into Bitcoin. Or if you weren't libertarian or computer programmer, like there's no reason that you would have like encountered it in any way.
Or buying drugs on Silk Road.
Yeah. And I would count that as somewhat libertarian, right? Like, so there was something about that which like if you had a misunderstanding of Bitcoin at the beginning, you almost certainly would have sold when it doubled, or for drugs on Silk Road or alpaca socks or whatever. And that was the big mistake for a lot of those people. I mean, you can't really blame them, like, for knowledge that didn't exist really at the time. But that's kind of my point. It took a lot of time for people to figure that out. And besides that, there were lots of other dangers. I mean, there were so many exchanges between, I want to say, like late 2010 to 2013 that exit scammed or were hacked or something like that. And a lot of people lost Bitcoin that way. I mean, like Mt. Gox, there's a ton of people that are still involved in that lawsuit trying to get their money back, because that was a significant amount. Like that was just kind of how you did it. And a lot of what we say now, not your keys, not your coins, it comes from that history of all of those exchanges that went bust and stuff like that. So I mean, there were so many pitfalls along the way, especially between 2010 and late 2013, that you could have fallen into. And there's a very good chance that you would have lost, or spent or done something bad with the Bitcoin that you would have gotten. So that's kind of my point in that essay.
I want to open the floor to this because honestly, I was rereading the 10 things you bought instead of Bitcoin list. And Jimmy, oh my God, you just didn't hold back. I'm just going to read 3 of them.
Okay.
Litecoin, because it's a cheaper Bitcoin without any of the development or decentralization. Honestly, that's not even a good one. A dating app subscription. That honestly, the Litecoin one is the worst one. Uh-huh. A dating app subscription, despite the fact that you're still forever alone. Porn, which makes you lethargic, drained, and unproductive the next day. Or a college degree which has nothing to do with the job you're doing now.
Yeah.
I mean, you're not wrong. Like, there's that website too that like it was going around, like
Bitcoin or shit. Yeah,
Bitcoin or shit.
Yes, dude. I sent it to my buddy because we bought like these Apple Beats, or not Beats, or not Apple, but the Beats headphones back in like 2011, and I was like, dude,
y'all fucked up.
See, but that's the stupid stuff that you do before you really understand Bitcoin. And that's really the message of the article for me, is that once you level up your game, you stop doing stupid stuff like that. The reason why you do that stupid stuff is because you don't understand what Bitcoin is. And once you really get what Bitcoin is, and you get to the extremes that like people like Pierre Rochard and D++ say, which is they sell their chairs, right? Whatever they have, they sell to go get Bitcoin because they really recognize the value. And they're no longer discounting the future, but saying, okay, the future is worth way more, and therefore I'm going to forego the dating app or the college degree or any of this other stuff. And honestly, we do spend a lot of money on stupid stuff. That's part of the fiat mentality that we're in. It's a very consumerist, materialistic sort of mentality that we've been psyoped into through propaganda. But that's essentially like, you know, exacerbated by the high time preference incentives of fiat money.
Jimmy, before we flip the script, I want to maybe give you the opportunity. Is there any point from this article that we haven't really gotten to touch on it that you want to further emphasize? Fuck you, P.
I got you, fam. This is a screenshot from bitcoinershit.com. Bitcoinorshit.com. This could be you, Q. If you weren't,
it literally was me.
bitch.
I instead bought the fucking I didn't even buy the Beats Solo because I was so broke in college. But like I was like, I want those Beats headphones. I want to fit in. I want to.
But did you know about Bitcoin back then, though?
It doesn't
No,
matter.
I actually learned about Bitcoin 6 months later.
Oh, okay. All right.
And
So, I mean,
my dumbass still said no.
Well, that's the thing. For a lot of people, like they don't understand it. And this is the belief that Bitcoiners have, is that once you really get it, this is your hedge against uncertainty, right? Like this is the hedge against all sorts of things. So like it is very unfortunate that a lot of people don't understand it, and they're no coiners and they're not really getting it. But like I said, it's still early, right? Like it's still early. There's a ton of people that don't get it yet. And the earlier you get to the point where you get it, the more Bitcoin you're going to accumulate, and the better you're going to be set up, and the less regret you're going to have later.
Quit buying stupid shit. Just stack sats. Don't worry about the price. I want to go to the other article you actually wrote on Monday of this week, though, which was wind and solar are the altcoins of energy. And I want to, if you don't mind further elaborating, I thought your paragraph where you broke down like what is energy on a first principles basis, I thought that was excellent, and would love if you could just share with our audience sort of how you came to those type of drawdowns of what energy really is and how we should rethink of it.
Yeah, energy from first principles, if you think about it, it's a way to do work, right? Like that's the physics definition. It's the capacity to do work. And the more energy you have, the more you can do stuff, right? Move a heavy rock, or dig something out of the ground, or, you know, place this over here, or drill something into this, or whatever. That's how things literally get built, right? Like if you want to make a computer chip, there's a lot of work that's involved, and all that work requires energy. That's from first principles. That's essentially what energy is. And it comes from, and if you follow that train of logic, the more energy you have, the more things you can build, and the better a civilization you will make. And, you know, like at the beginning, we started with just manual labor. And that was the energy that we get from food is essentially going into building boats, or spears, or homes, or whatever. And you did everything with your hands, and that's very labor intensive, and it doesn't scale very well. But then we started discovering stuff like fire, and we use like hydropower and wind power with windmills and dams and things of that nature. And those were, you know, pretty innovative, you know, during the Middle Ages and even Roman times and so on. And those made things more efficient, and you could you could do more things and build wonderful structures. What really supercharged civilization is the discovery that you can use fossil fuels for energy, and you could dig up coal out of the ground, or oil out, extract oil. Natural gas came later, but using these things, you can essentially multiply the labor of people, and that's what what energy really is. It's a way to multiply the labor that you have. So it makes our time more valuable. The reason why productivity continues to increase is that we have better and better multipliers on our labor. It's not because we're more productive per se. I mean, Americans are working longer, but in a sense, like the hours that we work, for each unit of time that we work, it's way more efficient. 100 years ago, you didn't have, the modern farming equipment that you do now. So you had to do things either with a horse or something like that, or farm animals, or use manual tools, some of which might save you some labor as well. But ultimately, when you have like the $1 million farming tractor or whatever, you could do the work of like 100 people, like very, very quickly, right? With just one person. And that's what energy actually does. And fossil fuels have been that multiplier almost all over the world for lots of things from 200 years on. And this is a thing that a lot of people don't realize, is it's still continuing to be used, and it's the cheapest and most affordable. Yet it gets vilified by the environmentalists, and instead they're pushing something clearly inferior: solar and wind, which only supplies one type of energy, specifically electricity. It's not very portable, it's not very reliable, and it takes up way too much real estate. And that's why I call it an altcoin, because it's being pushed on us. It's marketed towards us, much in the same way altcoins are. And this is what fiat money lets the government do. It's control people through propaganda. And so everyone, most people, or the cultural zeitgeist is that, oh, wind and solar are great because they're clean. Well, if you actually look into it, it's not clean at all, right? Like, you need all these like rare earth metals and weird things that for every wind turbine and solar panel that you have to extract from the environment just as much as you do like oil or gas or any of those things. And like, to construct like a Tesla battery or something like that, you have to basically strip mine various places in the world to go do that. So it's a narrative being pushed on us. And it's a way to specifically keep a lot of developing countries down. And that was something that I really wanted to point out in the article, because if you do go back to first principles, all of these, developing countries aren't allowed to have access to fossil fuels. And they do this with the IMF and green energy and stuff like that. They tell them basically, if you want our money, you can't build coal power plants, or have an oil refinery or whatever. That's ours. Or you have to go and use wind and solar. And of course, those are very expensive. And like, don't let anyone tell you it's actually cheaper or whatever. That's after all of the government subsidies and so on. And it's not very reliable. So if you don't have reliable power, then you can't make factories and stuff like that, or they're going to be much less efficient than if you're actually running them with on-demand power, which coal, gas, and nuclear allow. And that's the real problem, is that a lot of these things are ways for first world countries to oppress developing countries, and it's a lot like the IMF in that regard. And I think it's horribly unjust, and it's a boondoggle. And I've said enough. I'll let you guys comment.
No, I mean, look, to your point, and I'm not going to try to act like I'm
either an energy expert or an expert on what's going on in Sri Lanka, but like it's exactly that. It's these mandates that the country tried to adhere to that they couldn't afford to operate under, and then as a result, like they're out of energy. Like they don't have any oil. They're running out of food as a result because of all of these ESG requirements. And I'm curious what your thoughts are just on the broader ESG narrative and how that fits into this whole like clean energy. Let's get off of fossil fuel. Like it all feeds into one another. And I'm curious where ESG, how big of an effect it has on all of this.
Yeah, ESG is like the IMF. People see it as benevolent, but I think it's a horrible tool of oppression. It's a way to restrict people or to give a monopoly to certain favored groups or whatever. The dirty secret of wind and solar is that almost all of them are backed up by natural gas or coal power plants because they're not reliable enough, right? Like, so you build this thing, and solar power only works during the day, obviously, because there's no sun shining in the evening. Wind power only works when it's windy. And so in order to balance that out, they just fire up a natural gas power plant to supply energy to make up the difference. Now, like the obvious question at that point should be, well, if they're doing that, why have wind or solar at all? Because then you can just supply all of the energy with the natural gas power plant at the same time, and like it doesn't make any logical sense. And much like Keynesian economics that the IMF works under, yeah, like none of this stuff actually works. And that's kind of the point. Is so much of it is sold as something that's beneficial for people, for these countries, when it's actually not. And I want to point out that a lot of these ideas I got through reading Fossil Future, which is set to be released pretty soon. But Alex Epstein wrote this, and he's he has the book just laying out like the moral case for fossil fuels, and it's I don't think I could find a hole in there. It's like literally pro-human to be pro-fossil fuels and anti-human to be pro-solar or wind, because what you're doing is preventing developing countries from developing. That's literally anti-civilization, right? They could be building up roads and buildings and like clean water filtration systems and making wells or whatever. Instead, there's like, yeah, that's the one. Instead,
really quickly, we will have Alex Epstein on to talk about this book that Jimmy is ranting about on Tuesday on the show.
Yeah, you definitely should, and I would tune in for that. But the big thing is you're preventing all of these countries from developing, much like the IMF does, and ESG is kind of the same thing. It's a way to give a monopoly to the favored people. It's a subset of the Cantillon effect, right? Where you subsidize or you give loans to the people that you favor. So I know some oil executives and people like that, they can't get a loan from Wells Fargo, right? Like the bank won't give them a loan. But if you have like a wind farm project, you can get a loan. Like this is how the Cantillon effect works. You get a loan, you get freshly printed money if you are in compliance with whatever the authorities want you to do. If you're not, then you're going to get screwed. And in a sense, like this is the thing that the government is starting to realize. Like the ESG narrative against Bitcoin is really a fiat narrative against Bitcoin. It's, hey, we can't be in control of these things anymore. And, it comes under our jurisdiction because of this particular thing. And therefore you need to listen to us or something like that. And that's a horrible sort of like way of controlling people, because you're essentially taking away their productivity through taking away their like capacity to build stuff. This is how Rome fell. This is how every civilization falls is through all of this grift and rent seeking that goes on, where progress just doesn't happen because the powers that be decide what's good or not. Like there's a story of this Chinese emperor. I can't remember his name, but he inherited, I guess, as an emperor, like this large fleet of ships that were going out and doing all this trade and stuff like that. He decided instead that they were a waste of money, burned all the ships and invested in social programs. And that ended up being sort of like China's MO right up until about 20 years ago, right? Like they were very insular and sort of like, okay, we have to provide for our own people. He didn't realize that creating something for everybody is beneficial. And that was like, or trading with other people and participating in the global economy. Instead, he looked inward, and that's unfortunately what the ESG narrative is. It's a focus inward on stuff that's not even good science, I don't think, and that's really just a way to control people.
Sometimes I have a hard time finding where the mute button is. um, Jimmy, I'm curious, like we're bearing witness to, I think, the culmination of an attempt to get off of this fossil fuel reliance and then realizing, hey, we're actually not ready for that, bearing witness to what we're seeing in Europe and the way Russia has been able to sort of control energy exports to much of Eastern and Central Europe. I'm curious where your thoughts are on the future of energy and how fossil fuels fit into that future.
Yeah, I think fossil fuels are here to stay. And this is something that I point out in the article, is that if you think you can get rid of fossil fuels, you're crazy and you have no idea what the hell you're talking about, because you look at fossil fuels and what it enables, and you would have to get rid of all of those things. So cheap transportation, air travel, all manner of plastics. You can't get any of that stuff if you take away oil, for example, right? Like you can't have air travel on anything. I guess you can try like using hydrogen and trying blimps again or something like that. But like you can't have air travel the way we have it now without an efficient energy source like jet fuel. And the fact of the matter is that like we're talking about net zero, right? Like, oh, we want to eliminate all this stuff. That's lunacy. I honestly think that's lunacy, because you are essentially saying, okay, let's get rid of all this because there might be more carbon dioxide in the air, including air travel and all these plastics and all these products. I mean, like fossil fuel products are everywhere. Like literally almost everything that you touch or use every day, like they probably have some petroleum product in it. And we don't recognize these things as, oh, okay, well, we should stop drilling and like just pay way more for the substitutes that would come on, or like just do without these things. It's an anti-human thing. The thing is, like, you need fossil fuels for a lot of this stuff, and it's especially good for developing countries. And this is something that a lot of people just completely refuse to understand. Kind of like with Bitcoin, right? It's enormously useful for developing countries because they can say no to the IMF. Fossil fuels would be very useful, but they're prevented from using it. So I think it's here to stay. I think as countries like El Salvador get off of the dollar standard and go towards a Bitcoin standard, what they'll realize is, hey, if we fire up a coal plant, everyone can have reliable electricity. Or if we figure out how to build a nuclear power plant, everyone can have reliable electricity. And maybe we can start refining oil for something that we find off the coast, or maybe we can start doing some offshore drilling or something like that, and then they can get their industry and develop. And that's the dream of every developing country, is to get to become more developed. And the unfortunate thing is, with all of these restrictions like ESG, they're prevented from doing so, and somehow we see it as compassion when it's not.
I'm curious how much do you equate the ESG mandates and stuff to be like virtue signaling, self-serving, versus actually no, virtue signaling towards citizens and the masses, versus being self-serving and in the self-interest of these countries that are developed, to essentially prevent developing nations from reaching that sort of status and level?
Yeah, I think it's much more the latter. And the ESG mandates like definitely increase the monetary imperialism that most of them have. And if you keep them dependent on you, if the thing is, soon as you have like a good domestic industry, you can be self-sufficient monetarily, right? Like if you, and this was the case for Venezuela until Chavez took over, they had actually a very good resource. It was kind of like, it was a booming economy, and they were able to participate in the world economy, and they've turned it back into sort of like a developing country again by all of these socialist programs. But if you have a really good domestic industry, you can become a developed country. And like for any industry, you're going to need lots of energy inputs, because you're not going to be able to compete against anybody else if you don't have good energy inputs. Like what's if you have a natural resource that's not found anywhere else, what's going to happen is, well, just go ship it to China and they'll take care of the manufacturing. You're not going to have a domestic industry. You're going to be participating in somebody else's domestic industry. And in fact, that's more or less what the rest of the world does. If you look at who trades with who, everybody trades with China as like their top trading partner, because that's where all of the manufacturing goes. And that's where all the industry and civilization building honestly are at this point, instead of in these countries. So you don't develop infrastructure, heavy equipment, machinery, factories, capital goods, really. None of that goes into these developing countries, because you're lacking one of the most basic inputs that all of those things need, which is energy. And it's unfortunately like a very effective way to oppress those places so that they're under your monetary thumb.
I mean, would something as simple as creating the petro Bitcoin standard versus the petro dollar standard, which the world operates on today, would that be something that could help easily separate, I think, this financial control of energy globally? Or are there a lot of other steps that I'm not thinking about?
Oh, the big problem right now is the supremacy of the dollar. So the US gets to print the dollar, they get to set the rules. So the way it's played out in practice is that they use the IMF as a way to create restrictions on all of these countries about what they can do. And one of those restrictions is ESG. It's okay, well, you can't make a coal power plant with this money that we're lending you, or you can't do it at all, or else you're not going to get any money. So that by controlling the money printer, they can essentially put whatever restrictions they want, and they do this as sort of like a dependency loop where those countries take out these loans, and the Western countries end up owning large tracts of the resources. And if the oil is extracted from a country, for example, it's a Western country that does it, and maybe they'll build like an oil rig or something like that, but all the oil gets refined in the US or somewhere else. Maybe they might build an oil refinery, but all the profits really go to the Western countries, right? They've essentially taken over the production of all that stuff, and the local people don't get anything. Maybe a few jobs, maybe some bribes or whatever. And that this is the economic exploitation at play, is by owning this stuff, they get all of the benefits of it. And it's through printed money, so it really doesn't cost them anything. Whereas, for these developing nations, like having control of your own resources and developing those resources would be a tremendous boon to their economy. And like they're basically having to participate in the global economy with their hands tied behind their back, because they can't develop this stuff. And like maybe their hands are tied behind their back, but somebody's willing to feed them. But okay, in order for us to feed you, you have to keep your hands tied behind your back and not try to escape. And that's really the weird situation that they've been in with the dollar standard. Now, like if you had a petro Bitcoin standard, would that change something? I mean, possibly. I think that at least indirectly would undermine the dollar and eventually allow a lot of these countries to get off the dollar standard, and do stuff like volcano bonds or something, so that they can invest in their development. We call them developing countries, but they're prevented from developing because of the lack of energy and the monetary restrictions put on them. So it's the non-developing countries, I guess.
This conversation has reminded me of genuinely one of my favorite books. The lighting is so bad, but the 23 things they don't tell you about capitalism. And there's one where honestly, it doesn't do a good job of defending the argument for less regulation, but it does bring up this fallacy that Western developed countries essentially fed to regions like Africa, or very mineral rich and resource rich regions, that developed nations were more savvy and quick to realize if we can control this area, we will be able to mine those resources and we can sell them, versus if these regions of the world instead just held the resources that they were able to capture and they themselves took it out to the world, those parts of the world would probably be far more advanced and developed than what we see today, while possibly allowing most developed nations to still operate at or slightly below where they currently live now.
Yeah. And that's something that honestly a lot of people in the Western world just do not have as part of their reality, right? It's all of the prosperity that you have. I mean, think about the US, right? Just think about it. What product or good or service do we make? I mean, there are certain things. Obviously, the tech companies are huge, but do they actually produce anything? They all run on ads. So they're really platforms to market something else that's being produced. Where are those things being produced? Almost all of it is being produced outside the US, where labor is much, much cheaper. So if you think about it, all of the prosperity that we have, all of the things that we're able to do, all of the money that we have, all the wealth that we have comes on the backs of everybody else, because those other places are able to get the labor cheaper. And that translates to more goods and services for us without really costing that much, because we're the winners of the Cantillon effect, because we live in the US. And that's I mean, if you really think about the moral implications of that, I mean, this is some heavy stuff, because we're the ones responsible for keeping Africans poor, right? We're the ones responsible for there are all these racist ways of thinking about these developing countries. Oh, they're lazy, they're not smart, they have terrible IQs or whatever, and those are allowed to sort of proliferate. Oh, they have messed up governments, they don't know what the hell they're doing. Maybe some of that is true, but I sincerely doubt it. So much of it is just monetary oppression. we're preventing them from doing the things that would be good for them. And if they just got to do, stuff that would be good for them, like say develop energy, right? Use their own resources to, create stuff, I think they would develop way faster. And the last 70, 80 years, like since Bretton Woods, so let's call it like 80 years or so, like all of these countries have continued to be oppressed. We tend to think of like colonialism as this terrible thing, and it was because you did have a lot of oppression and stuff, but at least they invested in those places, right? When England, when Great Britain had control of India, they put in all these railroads and actually built up the infrastructure. But with a monetary oppression, now they don't build up anything. You just use their labor and and you use this monetary differential to get them to produce whatever the heck you want, and oppress them essentially so that you could be prosperous at home. It's like you couldn't design a better system because you don't have to fire a shot. You don't have to have a standing army. You don't, and it's honestly tragic because at least with colonialism, you develop those places because they were your stuff. In a sense, now you're strip mining these countries of all their resources through monetary machinations. And that's been terrible for these places and the people in them.
Jimmy, you're not, I mean, I was cackling off screen at the idea that you're absolutely right. With colonialism came the idea, it's not just let's get here, it's let's get here, build, develop, and further grow and establish this culture. And there was an aspect, I think, of sharing and spreading culture that doesn't happen anymore as a result. And I think part of that loses out on the development of these new regions that they go off and explore and exploit now, especially. Jimmy, as we wind down, it's been a crazy week in Bitcoin land and just clown world in general. I always appreciate your commentary, but I want to give you an open mic, fully unfiltered. Give us a Jimmy rant. What has been really pissing you off or irking you this last week?
Good question. I've been writing a lot, so obviously my next rant is coming on Monday, so I don't want to spoil that or scoop myself. But I will say that there's this idea of mimetic conflict, which I've been getting into with reading Rene Girard, that I'm seeing absolutely everywhere now. But there is something about within the Bitcoin community in particular that I put into the Pizza Day article largely. It's this idea that we all want things because we want to be this other person. And we want things because we imagine ourselves as that other person, and whatever it is that we want, say it's Bitcoin or a nice car or something like that, it's a way to get into the position of the other person, and that's where we want to be socially. And there's this weird status game that humans almost always play, right? At all times and all ages, people are always organized in some sort of society, and when you have a society, you have status, and you have people that are at the top of the status hierarchy, and you have people at the bottom of the status hierarchy. My thesis right now is that what fiat money does is it sort of puts this status game on steroids. Just everybody is forced to participate in the status game. And I think that's why anxiety has been going up generally for a long time, because status games are zero sum. If somebody wins, somebody has to lose. And that's what fiat money is, right? When you are expanding the money supply, you're not making everyone win. You're making some people win at the other expense of everybody else. There's somebody that loses. that anxiety, I think, has been terrible, especially for young people. You know, as they go through school or whatever. What if I don't, you know, what if I'm not down there? And this is what like causes them to sort of toe the line on, you know, any sort of dominant narrative that exists and so on. I think Bitcoin breaks so much of that. And unfortunately, when a lot of people come into Bitcoin, they don't recognize that Bitcoin is a very different game, that it's not a status game. If Greg Maxwell tomorrow said something ridiculous, I think we would all call him out on it. All of the altcoins, however, they still are part of this status game, right? Like if Vitalik says anything, you know, his word is law, right? He's at the top of the Ethereum hierarchy. And that status game, I think, gets worse before it gets better. And that's a little bit tragic, but at least in Bitcoin, we don't have to play that. And I don't know, it's not a rant per se. I think this is more a message of hope, in that I think Bitcoin fixes this, right? I think Bitcoin actually fixes this. We're going to get to a place where we're going to be judging on merit and not status. And unfortunately, it's going to take some time to get there. But once it does, I think you're going to get better goods and services. Now, status games are not completely going away. They're never going to go away. We're social beings and stuff. But minimizing that is minimizing politics, essentially. And I think we can all agree that less politics would be amazing. Unfortunately, everything is political in a fiat world. And that's because when you can get access to the money printer, everything is political, because you know, who's not going to want it? So yeah, that's my rant.
The old saying was divide and conquer, and they do a good job of dividing all of us. Jimmy, thank you so much for joining us, man. Everyone who's tuned in today and all week, thank you so much for joining us. We're going to do a hard wrap right now because it's Friday. Then I just want to go home. I don't want anyone to comment on the fact that I'm already home. Shut the fuck up. Guys, stay humble. Stack sats. Use promo code FOMO. Get 10% off of everything in the Bitcoin Magazine store, including the latest issues, including the latest swag. And get your conference tickets, because prices are going up in, what is it now, 8 hours? 8 hours. Prices will be going up, and that's it. The cheapest tickets to Bitcoin 23 are officially off the market. And stay tuned for some surprise stuff coming from the Bitcoin Magazine team on Sunday, Bitcoin Pizza Day. Have a good one all. Stay humble and stack sats.
Thanks, Jimmy.
Thank you.